What's going on, guys? Amy Nicholas talking about why you should invest $8 a day into. What's going on, guys? Amy Nicholas talking about why you should invest $8 a day into the stock market. This is just become really important to me because I feel a sense of catch up. And I think a lot of people are in this boat where you're starting to realize, yeah, maybe I should have put more money aside. Any money that maybe you did save, you ended up having to spend on something unexpected, or, like trip to the vet, hospital bill, unexpected thing with your kid. Like, so many things will come up in life and you'll be like, well, there goes my savings, right? And the cool thing about investing in the market, and I say cool, it's not necessarily cool, but is that when you put your money in the market, you are much less likely to go in there and take it back out, especially if you're negative, right? So a lot of times, I think this is very common. People will put some money into the stock market, immediately see that they're down, negative, not at a profit, and take the money right back out. I've been a long-term investor. I have had money in the market since 2006 when I first opened my 401k. And all these years later, my big regret has been that I stopped being consistent about bi-weekly, contributions when I was full-time, had a job back in 2015. And I put tons and tons of money into businesses, online businesses, and forgot to pay myself back, right? To pay yourself first is like number one key that, wealthy people talk about. It's like, pay yourself first. And I really never really understood what that meant until I realized if I had continued to pay myself for like the last 9 years, 10 years, things would be different. So I'm thankful and I'm glad I did what I did when I was younger, because it did give me a foothold. And now I look at investing, and I do swing trading, day trading, and long-term investing now. But I look at investing as being like the cornerstone of, here's how Amy is not stupid with her money. Because the money that I put aside all those years, taking percentage deductions from my paychecks, and never getting to touch that money was the smartest thing I ever did. And now I'm starting this $8 a day investment challenge since actually December 31st of 2024, and looking at the future of, number one, everybody has $8 a day that they are wasting in some form or fashion. For me, in the past, it's been material things like houses and motorcycles and just things, and now I'm in a point in my life where it's like, that stuff isn't as important to me anymore, but building real wealth is. So I'm grateful to be in this position, and I've had a lot of people reach out and ask me specific questions. What are you doing? How do you get started? What do you mean $8 a day? Is that even gonna, do anything for me? So I've just kind of like give a quick overview of what this challenge is about, how to get started, and is it for you? So first things first, you have to have a brokerage account. Personally, I decided to do a completely new individual account through Fidelity for this challenge, because Fidelity actually allows you to have multiple trading accounts. I have my IRA with them. Actually, I have 2 IRAs with them, and I had several other trading accounts. And it's just easy as like 1, 2, 3 to create an account, put your bank info, transfer the money in, start buying. Like, they make the funds available almost immediately once you set up your bank account. So that was like very easy. Would I recommend Fidelity to do this if you want it to be automatic and recurring? No. Because they are limited in the ability to daily invest. They do not have this option, which I think is kind of silly considering all the other apps out there that allow you to do this. But I found through a friend, and I'd heard about this company, but I didn't know anything really about it. Robinhood, and I think you can do this with Webull and Moomoo, that you can set up automatic daily investments where you just say, okay, buy me X stock, and put X dollars every single day, Monday through Friday. And it'll just happen as long as you have that money in your account. That's all you gotta do. So, yeah, I would suggest if you don't have like a empty account to start this in, personally, I would suggest one of those other apps that allow you to do the daily buys. So you can set that up, very simple. And then the question is, what do you buy? What do you actually put your money into? And me personally, I don't even remember what my mutual funds were, invested in the first 9 years of investment journey. Like, I had a money manager, like they were in some 401k fund. I had no idea where my money was going every year. Just got the annual statement at the end of the year and was like, okay, cool, But when I became an entrepreneur, I decided to pick my own investment strategy against the guy who opened my account at Fidelity, who was like, no, you should do this. I said, no. I'm going all in over here. So I invested in a mutual fund at the time called FXAIX. This is identical to, if you've heard of VOO, which is Vanguard's S&P 500 fund, or SPY, which tracks the S&P 500. These are all the same. They're just different. They're set up differently and run by different funds, basically, different companies. So I picked VOO for this challenge as one of my two. I'm actually doing $8 a day into two. VOO, you can buy fractional shares on just about every brokerage site where you say, hey, just buy $8 of it. Like, yeah, it's a $540-some stock ETF, whatever you want to call it. But you're just buying $8 of it. So you're not trying to save up your pennies and be like, okay, I can finally buy one share, of the $540 stock. You don't have to worry about that. Back in the day, you had to worry about that because they used to have commission trading. So like a couple years back, you used to have to pay every time you bought a stock or an ETF and every time you sold it. That stuff has all gone away. Thank you, Robinhood. Thank you, Moomoo. Thank you, Webull, for getting all these other brokerages on board with that. So that's one of the two that I decided because my FXAIX did so well over the 9 years I had my IRA set up with that. It just, that's the market, right? I invested literally in the market. The S&P 500, most people refer to that one as this is the market. You have the NASDAQ, you have the Dow Jones, but the S&P 500 is the top 500 companies in America. You're getting a chunk of those companies, basically, when you're buying, a share of VOO, SPY, whatever. And so my reasoning for reinvesting into that is because it worked. Went through the downturn of 2020, the downturn of 2022. 2023, even in the beginning, was shaky. And then there was, a dip in August this past year. And through all of that, like you still will see historically over time, the S&P 500 will make you money. Just stay in it. And that's the other key thing about the $8 a day investment challenge is there's no trying to time the market, okay? There's no let me try to buy on Mondays because it's going to be here maybe, or let me wait a month until Trump gets into office, or we're not trying to do that. We're trying consistency and reliability over time of our investment. So this is not by any means a get-rich-quick type of investing strategy, okay? We're just doing what is known as dollar cost averaging, which means you are buying in at different times. You're getting different price points. Some days the S&P could be at its highest of highs, and you might pay $555 for, the price of VOO, and the market could turn and we could be down to 500, but you're buying in different price points over time, and dollar cost averaging is basically like, hey, you're buying whether it's low or it's high. It doesn't matter, but your overall cost to continuously invest in the market is going to be averaged over time. So that's what that means. I just think if you just want to have a very simplified strategy that you just pick a set dollar amount, pick a set fund or stock, you can do an individual stock if you want. I personally, if somebody was like, Amy, what would you do in this situation? I would say do an ETF because you're buying into an index or a group of stocks versus relying on one single stock that may or may not go up. You know, could be the next Tesla, could be the next Nvidia, but it also could be the thing that runs to the ground and you end up with nothing, right? So the ETFs are historically much, I don't want to say safer, but they're much more reliable, okay? If things go up and down, much more reliable to see that your money is going to grow over time. So the other fund I'm doing, and I'll give you guys an update too on where like I'm at on this challenge, just how much I put in and what the balance is. But the other fund I'm doing is VGT, which is also an ETF that tracks the NASDAQ top 100 stocks of tech. Only tech companies, okay? Why invest in tech? Because tech for the last 2-3 decades has been the number one growth sector, okay? It's a very broad thing to say tech, but if you look at the tech sector, it has grown much, much more than the market. Much, much more than the S&P 500. However, this comes with caveats. Number one being that tech is going to be very volatile. You will see lots of ups and downs. You will sometimes be like, oh my gosh, like my money is like, woo! And then in a week, it could have completely reversed all your gains and you know, maybe you're flat or negative. Over time is the goal. Over time, if you look at, I pulled this data up on Yahoo Finance, if you look at the VGT ETF, and you compare what the S&P 500 did over 5 years, and that includes, you know, 2022, and you look at VGT's performance tracking the NASDAQ, you will see a massive difference, okay? It's really when you zoom out to 5 years that you see this. And we're in this for the long haul, so we're not worried about what is it doing in 1 year? Is the market going to go to crap? Is the tech sector going to be in the, you know, in the toilet? We're not worried about that. Looking at this long term, 3 years, 5 years, 10 years, 20 years, whatever. 5-year return, and I checked this like a week or two ago. 5-year return on the S&P 500 is somewhere around like 80%, 80 to 85%, which is great. Like that's a great return on your money. Okay, so that's why I'm investing in VOO as one of my two $8 a day. VGT returns somewhere near like 140%. Let me see if I can pull this up real quick. Because, you know, it's going to calculate every day based on the prior day's close. But 5 years out, okay, oh, it's even better now. 150%, y'all. I'm looking at this number in the parentheses here. I'm on Yahoo Finance. There's a number in parentheses right in here that shows 150% return on your money. 5 years invested into the Vanguard Information Technology ETF. Okay, let's just see where VOO is for 5 years. 81.89%. Do you like the idea that you could be maybe split between these two, making 80-some%, which is cool because VOO is going to be a little more reliable and less volatile, less up and down. But VGT, if you want to grow your money over time, you got some years to put this into, 150. We're talking almost twice as much as what the S&P returned here. Okay, so for my purposes, I'm relatively young. I don't have to worry about retirement anytime soon, and my goal is to be more risky and capture the time. Like, time is my friend right now. I still have years left. I wasn't completely stupid with it, you know, in the beginning because I did have my 401k and stuff. But at the same time, I should have kept dollar cost averaging consistently over the last 9 years of being an entrepreneur. So this is one of the ways I'm catching up. What else? The simplicity of this, like what can you expect to return? Let me just put a warning out here. You could do this $8 a day investment challenge for an entire year thinking like, yes, I'm winning, I'm gonna make some money, I'm gonna see my investments grow. And the market could completely turn around. In fact, it's already showing signs of that. And you could actually be negative in 1 year. You could actually be losing money. But that's okay. Because historically, over time in the market is more important than timing the market. Okay? 3 years from now, you could look at that same horrible 1 year and look at a 3-year perspective of investing $8 a day and say, oh my gosh, I'm up. And not only am I up, but I'm up X%, because the S&P 500 average, this is not every year, but an average of combined years, has brought back about 10%. So over 3 years' time, you can start to get a clearer picture of like, hey, my money's actually growing, right? There's no promises, there's no guarantees. There's been historical periods where a couple bad years in a row. But like I said, if you have the time, this is money we're putting aside in order to grow without worrying about needing that money right here and now. And I can tell you what, most people can come up with an extra $8 a day, Monday through Friday, to put into the market. It's not that hard. Okay. Let me pull up Fidelity here real quick. I've got, like I said, my separate account for just this challenge, and would help if I put the right password in. That's another thing I don't like about Fidelity. Their app constantly logs you out. Okay. So I got my little $8 a day challenge account. This is it's not going to show up too well on the screen, so I'm just going to tell you guys. Okay, so for VOO, and you'll notice something too, when you buy fractional shares, which means you're not buying a whole share of a single ETF or a single stock, but you're buying in fractions, dollar amounts, then you might come up with kind of uneven numbers because it's going to execute your order as a market price. So you're saying buy $8, but it might come across as like $8.09, $7.99. Just keep that in mind. Sometimes it's just the way the market is. So currently in VOO, I have invested, well, this is the value, I should say. This is the current value, $48.26 I've put into VOO. And I've also got $48.25 into VGT. So the returns are both negative right now. But you can see they're kind of closely matched for the first, what are we at, like 6 days of investing here. And I'm at a net, they do a breakdown like gains and losses. So minus 23 cents on VGT and minus 4 cents on VOO, to give you the full perspective here. So VOO, like I said, this is the less volatile one. When you start to put hundreds and thousands of dollars into the market, you'll start to see a gap between different things here. But you can see already, VGT, it has been very volatile, especially yesterday. So the first 3 or 4 days of doing this challenge, I was in the green. I think I was up a few pennies, nothing crazy. But I was in the green. And then yesterday was a massive sell-off day in the market. Like, not so much of a drop as what happened in August last year, but the corrections we're seeing are getting very close to that. So that's why it's negative. But, I'm only down total of 27 cents negative. So who the heck cares, right? So we're in this for the long haul, and I'll tell you too. So based on the current prices of VU and VGT, they're both in the. I'm sorry, VU is around five. Let's see. VU is 542.14 was the close, and VGT is priced at 626.53. Or sorry, 626.80. So how much of the shares do I actually own? 0.077 of VGT and 0.089 of VOO. So I don't even own a whole share yet of either of these because I just started investing. I'm only 6 days into this. So it'll be interesting to see where we are, a month, 3 months, 6 months, 9 months, a year, 2 years. This is by no means going to be ending anytime soon. I'm just going to be consistent and consistently adding to the market every day, no matter what. Now, if you do have one of these accounts like I do, Fidelity or Schwab, I think does not allow for daily buys, and you don't have the ability to set this up on autopilot for every day, you could set it up for a weekly where you just say, okay, 8 times 5 is $40. Okay, buy me $40 of VOO every single week. Boom. Automatic, done for you. I just personally like to do it daily just because I'm getting all different kinds of price points. So, and it's interesting to me just, seeing what's happening on a daily basis. But if you're the type that's like, you know what, I'm set it and forget it, I don't want to have to think about it, go ahead and set up a weekly if that's your only option. But like I said, I believe it's Robinhood, Moomoo, Webull are the ones that you can set up daily recurring investments. Just make sure that you give time to transfer the cash from your bank account to your trading account so that the money is there and ready to be used for those daily purchases. Okay, so that's all I got for you guys. That's where we're at. I'll keep you updated. Feel free to ask any questions down in the chat below. I'm going to be posting these replays as well on YouTube. I have a YouTube channel. So if you prefer viewing on YouTube versus Facebook, I will put my link to my YouTube in the comments. So be sure to check that out, and I'll see you guys on the next one. Take care.